Good afternoon, everybody. This is Thomas Wood. We're going to be talking about the live trading room trade of the day from the Value Charts live trading room. Once again, we had another up day. I'm going to talk about three of the best trades, in my opinion, because they had very nice reward to risk ratios. The first one is going to be one of the last trades of the day, which is a long in soy off of this yellow head or yellow tip inverted hammer pattern that we had on an hourly chart. We said we had a reversal pattern here. We were right on the support from yesterday's lows. We also had moderately undervalued prices, so we had the okay to go ahead and get long. If you had taken that, you were risking about 2 or 3 cents with your stop loss, and you had the ability to, if you took profits at the high, get about 8 cents. If you're still sitting in it and holding it with a break-even stop, then you could be in good shape to catch a longer move to the upside. The next trade that I'm going to highlight is actually a short we had, one of the first trades in the trading room, which was a short in gold, right where this red arrow is. This was based off of a 5-minute chart. We had a 5-minute bearish divergence where we had just about equally high highs, but a lower high indicator. And then we also had a 5-minute reversal candle, which is what we call a yellow hat doji. So you ended up being able to risk about $1.50 with your stop loss because you were risking right beyond the previous high. And you can see it sold off. You would have had the ability to, if you got out down in significantly undervalued territory, take around $12 an ounce out of gold to the downside, which is about $1,200 per contract. The last trade I'll point out also had a very nice reward to risk ratio. You were risking about a penny, and you were able to take out around 14 cents out of wheat. The reason we were shorting here is because we had a bearish divergence. We also had our MQ regression, which is this red and green line. Green means an uptrend, red means a downtrend. We had seen, okay, it switched over to a downtrend, so we're looking for short opportunities. We had a bearish divergence where we had equally high just about prices. We were also moderately overvalued, as signified by this upper yellow bar segment. And then if you looked at our MQ momentum indicator, we could see that the momentum had died off significantly compared to the previous rally. So we had the okay to get short. Again, you were risking about a penny with your stop loss, and you were able to take out, if you got out anywhere near the lows, around 14 cents with that trade. So a very nice reward to risk ratio there as well. Well, that concludes the trades of the day for today. I look forward to seeing everyone tomorrow morning in the trading room. Hopefully we'll have another really good day. I also look forward to seeing and meeting many of you at the New York Traders Expo next week up in New York City. So until next time, happy trading.